Hello everyone, and welcome back to another session of Osiris EA, the most advanced trading software in the Forex retail industry. And my name is Jose, and today we're going to just go over a few details, a few of my FX book accounts that as usual we use to collect data to have some indication what we can do or not with the trading information we receive from Osiris. We have different portfolios. We like to call them risk models. And as usual, remember that all information presented is for educational purposes only. You must consider your risk tolerance at all time. We have no idea what's your risk tolerance, but we do the best just to give you a quick overview what it's possible based on the data we have and understanding the trading conditions that we actually face every day. So we're gonna jump right away, and let me just go to what I wanted to show you guys. And we're just gonna go back to these. Well, first off, I want to share with you the page where we'll keep updating as much as possible all the information and future content. We have directly our MT4 coding, which is the company that hosts the EA and all the information you can see here. And of course, we keep adding more and more content and the services that we have available as it is right now. So perfect. Let's just go back and jump to one of the models we have, Osiris New Zealand. And so far here we see all the statistics, right? You have an idea about the absolute gain, always the drawdown, what to expect, what not to expect. We're working here with 18.45%. We're looking to profit to give a cold number that we're talking here almost $8,900 a drawdown. And you have to adjust that figure into the possible trading. So let's say in 2017, your valley was almost $9,000. If you have a $10,000 account, this won't work. With a $20,000 account, you're looking at almost a 50% drawdown. And then with a 30,000 account, of course, you just start adjusting that figure. Now, what you have to think is, okay, if I go for that figure, let me see if we just updated this. If I go for that figure, okay, my risk, and remember, we're talking about risk first, because never forget, when you invest in derivatives and Forex, in this case, the currency markets, there is a risk that you could actually lose your entire capital. Okay, this is very important. Losses are real, and you have to approach this as a business. And you're looking to risk with the objective of reward. Now, this year so far, the production as it is, as December 17, 2017, basically you have generated almost $8,500. Now, this is very important to understand, because if this is the production of the year versus the overall drawdown, once again, let me just switch this here. The overall drawdown, and happened this month as we sort of play with a few entries. You have to think that you're looking at 101 risk for 2017. Now, of course, depending on if you, as I said, 20,000, 30,000 equity, your investment capital, your risk capital, very important, risk capital, because as you're a retail trader, you're speculating. You don't really need to hedge your exposure to currencies. It all depends on if you're following a fancy portfolio strategy to adjust your risk. If you're buying stocks, if you're buying equities in foreign exchanges, then you do need some knowledge about risking your currency exposure. But that's a little bit of a more higher level strategy. If you're doing simply Forex because you heard of the higher returns, just keep in mind that at times that it's true that it's related to high risk as well. High reward, high risk. But you try to mitigate that risk. Now, if that's the case, here you went to 101 for this year. And then if you're talking, for example, $20,000, okay, just to give you that 20,000 equity figure, you went down almost 45% on your drawdown, and you generated as much as 45% on the upside in a period of 12 months. Now, what you need to ask yourself, if you're willing to take that risk to get to that return. Of course, when it comes to portfolio management, you will be looking to have a 5% drawdown with a 15% return, and that sounds beautiful. It's almost a perfect number. But since perfection doesn't exist at all, when it's a challenge to understand exactly how you can get this with as low as the lowest risk possible. In this case, the overall figure in the last, I will say, 12 months and more, we have full 12 months in 2017, but then if we take a look at what happened in November, the last 6 months, well, 5 months in 2016, then you see that's the overall figure, a 55% gain with an 18% drawdown. Now, very important to understand, if you pay attention to the figures here, okay, we have a geometric average holding and an arithmetic that in a way says we're profitable if we compound this strategy. The profitability of the system is 69%, which is not bad, and the profit factor of 1.19. For a martingale strategy, these numbers are pretty solid. Now, we have to understand the following. This is a full, like an average number, 55.6, and then you divide that into the drawdown, 18.45%. You get a figure here. This figure, the risk reward, is 3. So that means that the period of 17 months, the data is telling us that for every dollar we risk, we were in position in that sort of analyzed outlook to make 3 back. And that's very important. That's very important. Now, what we have done is that we reset it. Everything, we have no more hedge during these month, and we're all back to risk level 1 in the main 7 currencies of the strategy, and see how it performs in the next 3 months, collecting the data exactly to know what will be the end result. Again, thank you for watching. Please make sure to subscribe. If you have any question, we'll leave the information on the description box so you can contact the team at MT4 Coding. Thank you, and remember, Osiris EA, the most advanced trading software in the retail Forex industry.